Hello, my name is Brady Buckner, and I am the president of the Financial Services Innovation Coalition, or FSIC, or FSIC as we call it. And welcome to the FSIC podcast. Today I have a special guest, as well as the CEO and founder of FSIC, Kimble. Dr. Daniel Shoag is with us today. He is the professor at the Weatherhead School of Management at Case Western University. You know, Kevin, what I'd like to do now is if you could just set the stage for this discussion, and then we'll go into a couple of questions that we all thought should be answered.
Awesome. No, it's great to be here today, Brady, and Dr. Shoag, thanks for joining us. Last year, we produced a paper on AI, on automated lending, online lending, and its effects on reversing or eliminating discrimination in the housing market. And as part of our research, as part of our efforts on that effort, we've talked to people like Dr. Shoag. So this is a really good time for us to bring forward some more information and to really go full throttle. As you know, Brady, we and Dr. Shoag, we created a task force on housing discrimination and housing, racial inclusion in housing for this year, for 2021. They were planning to push into 2022. We're looking at legislation and other remedies to try to make sure we don't allow another generation to be discriminated on in housing.
Dr. Shoag, can you do some opening comments? I mean, you're one of the experts on this subject and have done a ton of research. Can you lay the foundation for that here?
Sure. So thank you, Brady, and thank you, Kevin, so much for having me. As you said, I'm a professor at the Weatherhead School of Management at Case Western Reserve University. I taught for many years at the Harvard Kennedy School, and I did my PhD and undergraduate degree at Harvard. And I've worked at the Federal Reserve, and my area of focus has always been urban economics and housing. There's always been stuff that's especially interesting to me. And one of the reasons I got involved in this work is that the housing market has changed so much in the last decade. There's just been a lot of innovation. And so, my work that I think we'll touch on a bit today, or maybe what, I'm hoping to, sort of pitch my work, looks at how some of this innovation has affected problems that have existed, discrimination and inequities that have existed for decades and decades in the housing sector. So, what basically, has there been any change in those problems associated with the big changes that we see in financing and structure and so forth?
Okay, thank you, Dr. Shoag. First question is, as we look at the housing market, one of the significant issues with it is that buying a house is the way most people in this country build wealth. And because of the bias against minorities being able to buy or refinance a house, they've really been damaged financially with that. And you wrote a paper related to this subject. What did your research find?
Yeah, I mean, I'm sure people who are watching this podcast don't need the introduction, but housing, household net wealth, especially as you go down the income distribution, and there are huge gaps both between homeowners and renters, and there's a huge gap in the share of home ownership between whites, where maybe something like 3/4 of households own a home, where it's somewhat less than half for Black households. And so you're sort of narrowed in on the an enormous problem. There's a lot of discussion about income gaps, but wealth gaps are even larger and more persistent. And so this is if you're looking for important problems, this is it. What my research looked at is changes over the last decade related to growing use of what I call, following others, sort of fintech lenders, right? There's been a real big change in the way people get mortgages, whereas it was mostly in person before. You go to your neighborhood bank, maybe you had a banking relationship and take a mortgage. Now a lot of the shopping and process takes place online. We sort of forget how rapid that, the internet is such a part of all of our lives every minute, that we sort of forget, that it wasn't all that long ago that things were done differently. Well, the discrimination you mentioned, that goes back, decades and decades, century, right? I mean, from redlining in the 30s, and then, since we have better data, let's say, post the 1960s and some of the civil rights legislation, all the research that looks at that traditional old way of doing it finds real inequities in both the ability to get mortgages in the first place, the interest rates that are charged, fees, all of those things when it comes to minority lenders. People have known that's a big problem, and there's a lot of research on it. What I wanted to look at is, has this process of moving online, has that changed that problem? Do we see the same sorts of gaps among this mostly online lenders that we tend to see among, we've seen for generations and continue to see among traditional lenders? So that's really the question that I'm asking and tackling in my research.
Kevin, I know you have thoughts on this. Can you please extrapolate?
Sure. So a couple of things in support of that is, one, there's a piece of legislation that was introduced recently by Congressman Clyburn, and I forget the other congressman, dealing with veterans in this space. So for years, the VA benefits were not equally distributed between African-American veterans and white veterans, so that even there they couldn't take advantage of those benefits, most likely not in large part because of the in-person nature of things. Because you were having to deal with a person to sign off on your loan, you weren't able to get a loan. So I think this research and our philosophy on this is right, that almost across the board, no matter whether you live in Chicago or Alabama, the in-person nature of racism has really slowed down economic inclusion and equality. And so the one thing I'd love to ask Dr. Shoag in his next round of answers is, did he find a difference between non-bank lenders and bank lenders when it comes to this space?
Dr. Shoag?
Yeah. So yes, there's a real clear gap. So when you're looking at traditional lenders, like many before me, I tend to find statistically significant differences in the terms offered to minority borrowers, Black and Hispanic borrowers. Yeah. That's a tragic but not surprising finding. The more the more novel finding is that when I limited to the sample of mostly online, what I'm calling the fintech lenders, largely non-depository bank lenders, although there's we could spend a lot of time talking about the exact categories. You see much less, if any, difference in the terms, and that's that is exciting in the sense given that they're growing rapidly as a share of mortgages. If there's less of a gap in the terms offered to minority borrowers, that is something that could be really exciting for tackling what's been a problem for long before all our times, since long before all our times. There's a lot of econometrics I could talk to you about, a lot of technical and stuff like that, but that you hone in on the punch. I mean, you're good at this, right? You hone in on the quickly, right? That's the big big takeaway.
How do we, Brady, if you have a question,
go ahead.
Follow up. How do we, encourage more use of the non-bank lenders in this space? I mean, are there hindrances to making them a bigger part of the mortgage? I know they're growing, but how do we help them, or what does that needs to happen to make them more accessible to underserved or minority borrowers?
So, I mean, one of the big problems that come out when you start to study mortgages is that most people don't shop enough. There's Andreas Pfister and his co-authors. People throw away thousands of dollars by not being able to shop, and it makes sense when you think about traditional lenders that can be pretty difficult, right? Maybe transportation is difficult. You don't have a car. You have to go meet with these people in person. Maybe you're not available during peak hours because you have a job, and all sorts of things, right? And so that can be a big problem, and failing to shop for terms, leaves borrowers, the market is sort of opaque, or at least was before you went online. And so you may not, it could be very costly to shop 10 lenders, right, and get quotes and those sort of things. Think about, used car where, you have to take a bus to get to the next used car dealership. Right? You're really in a bind. Now that things are online, it's much easier to shop, much more price transparency. And so, I think what you discussed is right. Giving people the option of approaching online lenders really does give the borrower much more power, and to avoid being stuck with a discriminatory lender in the neighborhood who knows you may not have different options. So I don't know if I exactly tackled your question about policy-wise what we can do about it, but I second your thought process that this is an important area of policy.
Through our task force, as we're looking at some sort of maybe legislative initiatives or policy initiatives, should we be seeking some sort of clarity or some sort of parity requirements so that banks can't offer people widely different interest rates? I mean, is that feasible? Does it make sense, or is it advisable even, as we look at this process?
Right.
So, again, the government is very involved in housing.
Right.
And one of the reasons that make my study possible is that, the government-sponsored enterprises, the GSEs, they're going to buy or insure mortgages, and they have pretty clear formula for doing it. And so you can sort of zoom really in on with a lot of information about the bank's cost or the lender's cost into what they might be able to offer a borrower, and then what they actually wind up offering. But when I talked about transparency, one of the key issues with my study is that interest rates aren't the only thing that matters when it comes to doing a loan, right? There's speed, there's fees, upfront fees, and all sorts of things like that. And so you're really choosing among a menu of options, and that makes it hard to narrow things down. Usually competition is a good, is a good remedy for some of these problems. And you do see that borrowers who shop more and have more options, right, they wind up with better terms. There are things that can be done, both in terms of expanding access to these online lenders, making sure things are provided for bilingual or for people in other languages, things like that. But it's an encouraging trend, I guess.
What did you, when you read the San Francisco report, San Francisco Fed did a report late last year, earlier the year before, on this very topic, and they found that there was, like you found, there was a 40% reduction in discrimination with online lending. Do you think that report was right, or do you think that they underestimated, overestimated, or did they take in, what other criteria did they take in to come to that conclusion?
Yeah, I mean, I don't want to claim I'm not the only one out there who's found this, which may not be great for me personally, but it's good for believing the finding, right?
Right.
There's several papers on this. There was an early paper by Bartlett that looked at this and found less discrimination among sort of what you call fintech lenders, I mean, as you guys know better than me, right? It's not immediately obvious that would be the case, although obviously, it makes sense. Competition could lead to less discriminatory outcomes. The use of algorithms and stuff like that. There's a lot to be concerned. There was a lot to be concerned about. Thankfully, it's evolving in a good direction, right? Where more choice for borrowers tends to be associated with good outcomes. One of the things we did in my study was try to match borrowers, right? One concern could be, well, maybe the online lenders are cream skimming in a way, right? They tend to get the borrowers who are more savvy, younger, more facility. Yeah. So we tried to, zoom in on, pretty similar minority and white borrowers to really, there's a bunch of detail that goes in there, but it seemed like a pretty robust finding. And so I guess that you'll see several papers finding this.
Outstanding. So what, if anything, during your research on this issue surprised you?
It's a great question. So one, it is surprising to see how quickly the people are switching to these fintech lenders. You look at the share, and in some places it's pretty substantial. Relative to these traditional lenders who've been around for centuries, right? These enormous depository banks. Not centuries, a century. Yeah, not centuries.
Well, JP Morgan's been around since the 1800s, so
Yeah. Yeah, well, I personal anecdote, right? We had our first mortgage, we took with JP Morgan. I went in person and shook the banker's hand and all of those sorts of things. And then we refinanced not all that long ago, and we did it with loandepot.com. They had a better rate,
It's a sexy mortgage name. Yeah.
Rings true. And that ring, there's a literature on this. People tend to find that online lenders move faster. People cite them as more convenient. That was certainly my experience, in that particular refinancing example. And so, it makes sense. Again, it's not surprising. Everything is moving online. We buy the groceries online now too. But in a stodgy industry like mortgage lending, you see the same trend. There is the other thing that's surprising from an economist standpoint is that people aren't, that so many people are still not shopping around, right? So, many people still, go to the bank that they've had a checking account with, you know what I mean? And take a mortgage regardless of the terms. And, if you look at the data, you'll see people who are paying rates that are, you almost want to reach out, if you can reach an anonymous data point and be like, hey, you could do so much better out there.
You're being ripped off.
Yeah.
Now, did you find that to be true with credit unions versus online lenders, or do the credit unions compare favorably with the online lender?
It's a great question. That isn't actually something that we really dug into in this study. There are a lot of different, even by calling something an online lender is, there's gradations, right? Chase has a website and, stuff like this. So, but that's a great question, and it's definitely something we can look into. I'm sorry, I don't have a.
No, that's fine. I'm just curious. Thank you.
Yeah, I do think, now I should also say, right, we're in a time where house prices have risen pretty dramatically. And so these disparities that exist in home ownership and, the consequence of that has been that, white households have seen this big run up in household wealth that just hasn't been there for minority borrowers. So, again, this is, a enormous problem to address.
Can I throw one other little caveat in? What is your opinion on the real estate appraisal issue? Because we're dealing with that across the nation. We've been dealing with it for a few years, actually. But this has come up a lot lately, and we're adjacent to Maryland, and the Attorney General of Maryland is doing a big investigation into real estate appraisal, because there are a bunch of heavily African-American enclaves whose properties are severely undervalued, they feel. So what have you, is there a way for our online lending to work on that or change that, or the online process, or is there, what do you think of that as a wealth generator?
Yeah, it's a great question, and it's an especially interesting time because, relative, related to COVID, for not great reasons, and reasons unrelated to the underlying discrimination. There's been this big move away from in-person appraisals towards these sort of appraisal waivers, where the appraisal is generated using, an AI type formula where they're taking comparable sales, information online and so forth to generate an assessed value. And so, I think for cash out mortgages, we're talking something like 30% now are getting these appraisal waivers, if not more. And, a pretty meaningful fraction of, just overall purchases, mortgages. So what, again, it makes sense to be concerned about the algorithm or something, but we're getting an interesting trial of exactly the issue, right? How much of the differences in appraisal values come because, well, you're sending a person to someone's house, right? And we know that people, people are discriminatory, right? And that's so how much better do we do when we don't have that? And I know there's people working on that research, that could also be an area where, taking some of this out of the hands of individuals who are biased could be a big gain.
I think that's all the questions we have. Kevin, do you have any thoughts? And Dr. Shoag, if you have any final thoughts before we close it out?
This has been great. I mean, again, thanks for having me on, Brady. You do a great job with this show. I'm glad to be a part of it. And Dr. Shoag, you were great. Look forward to working with you in the future on some other stuff. I think we've actually laid the groundwork for some future activities.
Oh, there's no doubt. I've got a huge list of questions, but I think we've covered some real basics. And next time we can, if everybody has time, we can get into some more of the nitty gritty. I certainly want to talk about algorithmic lending and how it can be further improved to reduce bias, because there's still bias in it. So, Dr. Shoag, any closing comments?
Yeah, well, first, again, I want to say thank you to both of you for setting this up. This was really fun, and we can talk about this stuff later. It's really interesting to me, and I think pretty highly of your work. And then, say, well, there's, there isn't a solution. There's probably, a suite of solutions, but the fact that there's an encouraging trend is exciting. And, hopefully we'll see, this problem, this plague that's been around for so long, at least start to loosen up.
Great. Mr. Kimble, Mr. Shoag, Dr. Shoag, thank you so much for your information today. It's very interesting. Just a reminder to folks, the Financial Services Innovation Coalition is a network of economic innovators, legislators, community groups, innovative companies, academics, who all share a passion for applying emerging technology and market modernization to really create a more inclusive economy, and also to advocate for public policies that promote economic development. For more information, go to fsicoalition.org. Let's close it out, guys. Thank you so much, and happy holidays to you all.
Thank you. Thanks, Brady.
Thanks.